Good morning, it's Steve O'Hare from Signal Centre and welcome to edition 490 of A Talking Bull. I'm on my own today while Joe's away on holiday, but we're going to go through the markets as normal. We're going to just pick up on the highlights and then look at the technical analysis that we can see behind the moves that we're seeing at the moment. So another negative session for Asian markets. Overnight saw losses across Chinese and Hang Seng Hong Kong markets, with Japan indices closed for a bank holiday. That weakness came despite a better than expected Caixin PMI, which rose to a 3-month high of 53.8. Chinese economic growth prospects have come into question once again, with Premier Li Keqiang stating that the economy faces new downward pressures, which will require tax cuts for small and medium-sized companies. Meanwhile, the government has instructed people to stockpile food as COVID cases continue to rise. Please don't start doing it here. Today sees a focus on the US, with the ADP payrolls leading us into the latest FOMC plus meeting. While it looks highly likely we will see the Fed begin tapering their asset purchase program, the gains seen in US equities highlight a willingness to look beyond the event for now. All-time highs. Blue skies. Let's dive into oil to start with. I'm picking oil because I've just done a video on it. You'll see it on YouTube later, on our YouTube channel. But yeah, just picking up on the impulsive move higher. We're in a Elliott wave, fifth and final leg. Looks like we've topped out on the weekly chart, but I have to see confirmation of it. On the daily chart, we've got this bullish trend channel higher, and we are breaking it. Volume dropping off a little bit, so an indication maybe that the this bullish impetus is running out of steam, and we can see it a little bit closer on the 4-hour chart. Levels to watch really need to get above 83.95. We're looking to sell a rally around that level in WTI crude oil if it does get up there, and $80 really the line of support. Obviously we could see a little bit of support coming in at around about 80.60 also, but with oil inventories out later and the OPEC plus meeting tomorrow, we expect further volatility there. Natural gas, we saw a pretty decent sell-off over from Thursday to Monday. We dropped about 17%. However, yesterday we saw a nice uptick, although the volume was low, and we've seen price action hanging around those highs from yesterday, 558 on the short-term time frame. Looking really at this reaction from the support just in front of the previous swing low, so a higher low, and it's catapulted prices higher. Really need to break above 560 to 580. Obviously we've got this this gap here, so this is quite a pivotal area for me. 561, anything above there, and we could see prices project higher once again. Gold under a little bit of pressure this morning. Let's take a look at the daily chart. See how that played out yesterday. This bullish channel that we were in, we broke on Friday, and we pulled back into it yesterday, but have managed to close below it, and also close below the 1790 resistance area that we keep seeing. 1771 provides the support. A break below there should open up a move to 1755 to 1760. Obviously, the longer term support coming in just above 1720 before the 1680 area of support. Silver, this is on the daily chart. We're looking 2483 was the peak of this swing low. Shooting star candle confirmed, and a bearish engulfing candle yesterday. So under pressure. 2338 the low yesterday and today, and we should expect a move lower if we do manage to break above there, break below there. Bearish momentum seen on the MACD, so be aware of that. Let's dive into Forex. Dollar index, dollar stronger, picking up a little bit. We've got the dollar index level to watch, 94.30. A break above there should open up a move to 94.56, and we're finding support coming in at 93.81. So this strength in dollar will have a negative impact, obviously, on Eurodollar and cable. We saw the bearish engulfing candle from Friday, saw positive momentum at the start of the week, but this is starting to negate now, so we're under a bit of pressure from a Eurodollar perspective. We are in a bearish channel on the 4-hour chart, and although we can see this reaction higher, we can see really a stall around about the 116.13 and resistance up to 116.25. Support coming in currently at 115.74, where again we're looking to sell rallies in this asset. The double top formation has almost hit the measured move target, stalled just in front of it. Actually, let's get rid of these Fibonacci lines there from the previous move. Let's get some cleaner lines in there. 61.8% fib. We're hanging about the 50% retracement level. That comes in at 135.73. Bearish outside candle on the 4-hour chart. So further negative price action expected to be seen once we manage to break the 136 area. They should open up a move down to at least 135.70. On the dollar yen, we've got, let's get a couple of trend lines in here, potential trend line here. And we've got, obviously, we've got this potential for a head and shoulders up move. The dollar yen really looking to project higher with this dollar strength. And also we do see this yen weakness. So that's something to note. It's a double whammy for this pair. Price action looking positive. We had a bit of indecision yesterday, and today we're off to a positive start. We have traded higher, but have pulled back and really need to hold above 113.74 to be positive on this for the short term, and 114, take that out, and we could project higher to retest this previous swing high and the downward trending channel. Bearish momentum is stalling ever slightly and potential to turn positive. Aussie dollar, Aussie took a bit of a hit yesterday, and we saw it break the 74.54 area. We've projected higher this morning and have tried to retest, but that's forming a shooting star type candle. So potential for Aussie dollar to continue this move lower really should open up a potential move to 73.78. But we are trading around decent areas that we've seen, sort of like the bulls and the bears go head to head before. Taking a look at cryptos, Bitcoin continues to hang about this all-time highs. It's really not letting it go, although we keep seeing that the sort of the bullish upticks being sold into. However, we have posted a higher high compared to the resistance we found at this 63.78. 63,785 level, and we are trading just below that. 62,700 will provide support. Below there could open up a little bit of a pullback further, but really need to push above 64,300, and that should give some momentum to challenge the 67,000 all-time high. Cardano had a nice uptick also in the last 8 hours. We've seen it break above the $2 level, and it's pushed higher to 210. So that's a positive. We haven't seen these alternative coins really sort of like supporting the Bitcoin move. Ripple also has broken above this downward trending resistance line, so that's looking good, challenging the 124.40 level, stalled in front of there and pulled back to 120. So 124.40, a break above there, we should see prices continuing higher. And Ethereum, all-time highs in Ethereum, managed to get up to, where do we get up to? 4,643, and that looks primed to continue higher also. So Bitcoin really, well, all the other coins gaining a little bit of confidence from this continuation and strength shown in Bitcoin. So that's looking positive. Let's have a look at indices now. Ftse continues to show signs of strength. We topped out around about 73.08, pulled back lower. Now support comes in at 72.40, and below that we've got 71.90. Above that 73.07. We'd like to see that taken out to continue this bullish trend channel. The DAX again attempted to really sort of like break that all-time high. Got up to 15,981. Our analysts are looking to short this in front of this resistance level that we've got above. and they feel that the momentum is stalling as we project higher. That is bearish divergence, and this could be short-lived for the DAX. Very difficult to say that for the Dow. These guys continue to push higher. 36,087.5 we've got as a high, only about 40-50 points from where price action is at the moment. So that's still on the front foot. No real signs of slowing apart from the bearish divergence we keep mentioning. You see the momentum, the MACD, these levels are moving lower. The peaks are moving lower while price is moving higher. That's bearish divergence, something to be really aware of when you're trading, especially on a short-term basis. This is a 4-hour chart. Seeing the same sort of things in Nasdaq also. All-time high, just in front of the 16,000 level. So looking pretty good, but the momentum is stalling as we're pushing higher. Bearish divergence is a real warning sign for me. And all-time high in S&Ps. 46.35, that's the high, and we're just trading just below it. But again, bearish divergence, be aware. Aussie 200, last 4 hours, we've seen a retracement from the push higher overnight, 74.35. We'll pull back to just below 7,400, but still looking quite positive, although it is in a sideways channel after this propulsion higher. Right, the China 50, for me, the real key level to test is the 14,500. We're still 900 points away from that now. We've broken down below the support at 15,570, and we expect that to remain under pressure, judging by the headlines that we've come out this morning, courtesy of IG Morning Call. The Hang Seng also under pressure. We look to be forming a nice head and shoulders formation. You can sort of spot these quite quickly when you're looking at as many charts as I am. Nice head, nice neckline, and that looks like potential for a further move lower. I'd prefer to see a break and a close below this 24,860. But this looks like a bit of a retest of the break of the neckline. So that looks negative for Hang Seng. I'd be a seller there. However, the Nikkei is looking a little bit more punchy. This almost looks like a bit of a bullish flag formation. Only short-term basis, obviously. There's the flag. There's the flagpole that extends higher, and you normally get some sort of move which is equivalent to the flagpole. Somewhere like that, which will take us up to these highs. So that about covers that. Gun to head challenge. What did I do yesterday? What did you do, Steve? Let's see. I went short. I think I went short of Nikkei, actually. I went short of Nikkei, but it didn't get stopped out, but it was offside when we closed. So I'll check back on that, and I'll put it in the show notes later. So what am I looking at today? The one that really sort of like strikes a bit of a chord is this Hang Seng. So I might go for this. Looking at that at the hourly chart, this head and shoulders formation, obviously on the 4-hour chart just highlighted. Looking at the hourly chart, we are recovering slightly. We are below the Ichimoku cloud. We should get some resistance there. Let's fade this little move here, and we could keep the stop quite tight. Keep the stop quite tight, just hoping that we will hang on to this trade. The swing high from the 1 o'clock candle seems to be the sort of ideal placement for the stop. It's a pretty aggressive trade. I'm looking for a move, and I'm going to target a 3-to-1 risk reward, one of my favorites. Targeting move to 24,456, getting short at 25,056, and the stop at 25,256. That's the Hang Seng 50. So that's the gun to head. Right, for the rest of the day, as we said, oil inventories out later. Well, we've got Eurozone unemployment rate at 10 o'clock. The US ADP employment report, 12:15. That's an interesting one to watch. Again, high volatility we expect, ending with non-farm payrolls on Friday. US ISM non-manufacturing expected to fall 61.5 from 61.9. That comes out at 2 o'clock UK time. Oil inventories, as we say, 230. Last week saw a surprise build of 4.2 million barrels. And the FOMC rate decision, interest rates are expected to remain unchanged, but an announcement on the tapering of bond purchases is expected. So the big volatility event at 6 o'clock UK time tonight. So be careful out there. I hope this has been a decent summary for you and look forward to catching up again tomorrow. Thanks.